Hello and good morning, everybody. You're with Martin Bennett, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. North American markets first. The Dow and the Nasdaq finally started moving. 32 points for the Dow and almost 90 points on the Nasdaq. The Dixie is nearing the 100 mark. CPI index year on year 0.1% better than the expectations. Excluding food year on year as expected. Month on month as expected as well. Industrial production month on month 0.1% worse than the expectations yesterday. Capacity utilization as expected, and housing market worse than expected as well. Higher than previous tick flows reports yesterday. The dollar reached a new 7-month high against the euro yesterday after official data released early in the session supported Federal Reserve policymakers' case for rising interest rates in December. The US data provided an encouraging reading on consumer inflation that supported the December hike. Inflation remains one of the key points for the needed to be fulfilled before the hike actually happens. Today, FOMC meeting minutes should further reassure traders of the recent hawkish tone of the US economy. Yesterday, we had a rather big range on the dollar-yen, over 100 pips up. Today, as I said, FOMC meeting minutes, building permits month on month, housing starts month on month and year on year. On Friday, for the North American market, we have the inflation report, CPI, year on year for the loonie, for the Canadian economy. European markets, the DAX and the CAC moved 70 points up for the DAX, 40 for the French CAC 40. The ZU economic sentiment came out lower than the estimated and the previous. The readings are not that good. The current account situation, again, lower than the estimated, but better than the previous. All EUR Pairs did ranges from 40 up to 100 bips yesterday. Today, we have the construction output and the Swiss ZU survey expectations this time. On Wednesday, we have the ECB non-monetary policy meeting minutes. And on Thursday, we have the monetary policy meeting accounts. On Friday, the consumer confidence for the European zone in general and German PPI readings. IMF meeting is in the minutes of its member countries to discuss stabilizing international exchange rates for facilitating developments. The event might have an impact on the exchange rates and the balance of payments as well. Traders should pay close attention to this event as it might bring a new dimension to the market. Moving to the Asian Pacific markets, the Nikkei 225 yesterday did 155 points up, opened with a bearish gap of almost 30 points today and down 125 already. Today in the agenda, we have the exports, imports, foreign bond investments, and foreign investments in Japan, stocks. This is for the agenda for today. On Thursday, we have the Bank of Japan interest rate decision and monetary policy statement, followed by the regular press conference from the BOJ. On the Pacific front, yesterday the RBA meeting minutes was due, and also there was a speech from the Assistant Governor, Mr. Kent. Starting with the minutes, basically, the forecast for the Australian economy remained for growth to strengthen gradually. The Reserve Bank of Australia quoted that yesterday or today, no matter where you are. The slowdown in Asia had been more persistent than early anticipated and had contributed to lower commodity prices. The statement had a dual narrative. The prospects for an improvement of economic conditions have firmed, while a low inflation outlook could provide some scope for further easing. The economy is also set for its best year of jobs growth since 2010, after adding almost 60,000 workers in October. when unemployment fell to 5.9%, while consumer confidence has surged in the past 2 months. The minutes showed the RBA's appetite for further rate cuts is fairly small. Mr. Kent's speech, the changing nature of China's development implies that the potential for commodity prices to rise from here is somewhat limited. Basically, Mr. Kent said that, who's also chief economic advisor to the Mr. Governor Glenn Stevens. China's leaders are seeking to transition from an investment-driven manufacturing dominated economy to a more consumption and services-led one in the next 5 years, while maintaining growth of at least 6.5% a year. While our competitive advantages in service industries are perhaps less obvious than they are for mineral resources, the rise in the demand for services from a large and increasingly wealthier populace in our region will no doubt be to our benefit. This is the conclusion from Mr. Kent. Today, we have New Zealand GDT price index, and also we have Assistant Governor Debeley will have a speech. On the commodities front, the S&P 500 index had a range of 21 points yesterday. Currently is quite high, 2050 reading. The gold had a range of $21 yesterday, trading at 10.71 per troy ounce. Silver had almost a range of 20 cents, trading at 14.20. WTI had $1.50 range at almost $41 now. The natural gas is trading at 2.37 at the moment, range of 14 cents. Crude oil stocks change on Wednesday. The government report could show crude stocks rose by 1.6 million barrels in the week ended November 13. On Thursday, we're going to see natural gas storage change report. That is all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers.